Hi, this is Zach Meir from Zach's Traders Cafe with a look at some single stocks on Friday, the 29th of July. Starting off with Anglo American and break to the upside here through the previous resistance area, that old peak in April around the 814 pence level, so we're well clear of that. The view at the moment is that while there's no end of day close back below the floor of the gap and the 10-day moving average at 801 pence, we're head significantly higher. The implied target here, the top of a rising February trend channel at £10.50 plus. That could be seen as soon as the next 4 to 6 weeks. Interestingly, the RSI is only at 64, so not overbought at this stage. In fact, we've got a very strong trend there with a multi-tested uptrend line from May. Next stock, BT, which has managed to wrestle off the unwanted attentions of Ofcom. Situation here is that market's still breathing a sigh of relief, and we've got that in the form of this triangle breakout here. Was suspected this would be a reversal formation rather than a continuation one, which triangle ones normally are. End of day close above the 50-day moving average as well helps. That's around 412 pence, and really while we hold above the top of the triangle and the 400 pence level, one would be looking for a target here up to the 200-day moving average again at 448 pence over the next month or so. Next stock is further down the tree as far as the stock market is concerned. It comes in the form of Just Eat. Here we've got a stock which was initially shorted quite heavily, but seems to be proving the doubters wrong. We've got this breakout here through 5 pence, through the old, 500 pence rather, through the old 496 pence peak from December. Top of the channel there from that month up to 600 pence. And that's valid while there's no end of day close back below 496 pence. Best way forward probably is to use the 10-day moving average as a trading stop loss as you run the position higher. Randgold Resources, obviously one of the best performers on the FTSE 100 this year, not surprisingly so given the recovery in gold. Still waiting for an end of day close above the 20-day moving average at £89.86. We just spiked through that yesterday. If we can get that over the next couple of sessions, then one will be looking for a £100 plus target, probably up to £105. Stop loss at this stage just back below the £85 level. But at this stage, probably one would not expect the stock to go anywhere near that, especially given the way that we've had a rebound for the RSI from over the 50 level to leave it at 58. Stock which has not been doing so well is Sports Direct. Here clearly being battered by adverse fundamentals and the runaway move to the downside that you can see here from the daily chart. Gap to the upside yesterday, which might be the first sign of a recovery, especially while we're above the 10-day moving average and the floor of the gap at 261 pence. We could get a follow-on move back up to the 50-day moving average at 321 pence. There is a line of resistance here running towards the 320 area, and really that is likely to block the shares on any attempts to rally further than £3.20. But the ideal scenario is, in fact, we don't actually break back below the 20-day average at £2.70, but it looks as though one would have to give this a little bit of wiggle room down to the floor of the gap. On to Sky, where we can see how the recent past has witnessed a recovery attempt after that horrible looking spike down in the wake of the Brexit vote. Situation here is that it's possible to draw an uptrend line from the end of last month, probably within a rising trend channel heading for £10.50 over the near term. One would be looking at that £10.50 area while there is no breakback below the floor of the channel, £8.73, which is also the 20-day moving average. RSI helpful in the sense that we've had a double bounce off the neutral 50 level for the earlier part of July, so that should provide positive momentum, even though yesterday's candle doesn't look particularly inspiring with that a spike and then retreat later in the session. But at least above the 20-day moving average, that looks positive. Finishing off with Thomas Cook, which beaten down by the adverse fundamentals again. There is an uptrend line there from the end of June, also an uptrend line in the RSI window. So we might see a bit of a run up here back towards the low to mid 70s. End of day close above the 50-day moving average of 66 pence could lead us back towards the late May resistance, which is just above the 75 pence level. At this stage, only back below the 10-day average at 61 pence, and this June support line would question the recovery argument. That's it from me. More updates on Monday.